In this video, we're going to talk about Rcat Holdings, trading under the symbol RCAT. Before today's video begins, if you like my videos and would like to see more stock analysis like this one, please like, comment, and subscribe to my channel for more. Rcat Holdings is an interesting stock to look at because of its sector it is in, what we know for sure about the price actions, and the current market sentiment about the special, wacky, and exciting stocks in general, which I would include RCAT in. Before I go on, I just want to say that, in terms of the risk profile, Rcat Holdings is actually right up there with high-risk speculative plays. So definitely make sure to keep your chips in if you don't want to lose them, because chances are you may actually lose a significant portion of your investment in RCAT. Like, this is a non-negligible probability. All right, moving on. Rcat Holdings is a drone data storage company and also operates in the satellite field. It has quite a few governmental contracts going on, so I would say that the company does seem to have some decent backings from institutions with very deep pockets. Well, when I say deep pockets, I mean like at least for a company of that size and of that scale of operations. Some of their clients include NASA and DoD, so definitely the kind of institution you want to do business with. Actually, even if the company specializes in drone, I think that they are trying to capitalize on two main trends in the market at the moment. The first one is the hype of space-related stocks. They don't do it now, but there are some little hints here and there that they are trying to position themselves in such a way that, they are looking to target the same kind of retail investors buying up Virgin Galactic or SpaceX and Blue Origins if they were to become public in future. The logo looks sharp, almost like an app icon. The background is simple, all that combined to the current trading volume of around 236 million shares versus a trading volume of about 3.4 million shares on average. It's safe to say that it has gathered a lot of interest from retail investors. The other thing that goes for it is that the stock is currently considered as a very small cap because it's valued well below $1 billion. Currently at $193 million as of now. This means that the company is still considered as an early stage, let's call it startup for the sake of argument, and the market is more likely than not going to increase the valuation as time goes on. Actually, I don't know if some of you still remember when we covered about Novavax and Moderna back in the days, when they were still small companies that were just coming ahead. Basically, one of the more significant upsides for a company like this, with a small cap compared to its peers and a lot of trading volume, is that its upward potentials are much bigger than a company that has already given a huge market cap. So, for example, if Rcat Holdings were to have the same valuation as Palantir, then it's not as obvious to say that, oh, the company just got a new contract. That means that their stock is probably going to increase. Like, this is what a lot of YouTubers have said over the past few months, even though the stock price of Palantir didn't go up as much unless there were some significant cash inflows to the same sector. Because when a stock is valued very high to begin with, having new contracts, new revenue streams here and there were kind of expected and already priced in, so they won't really help that much. But that's not the same thing if the stock has a small market cap to begin with. It would be a lot more sensitive to where the company's operations are at the moment. And this is why I think that Rcat is worth a shot if you have a risk profile that fits with the stock. What do I mean by the right risk profile is that if you're disciplined enough and have been like this since the beginning, since the first day that you trade, with a diversified portfolio that has the capacity to take a hit if your investment in companies like Red Hat Holdings don't pan out as you wished. I mean, if you look at the price chart, it almost feels like the stock price of Ideonomics. Some of you may remember that the stock, which at the time was the talk of the town, with every retail investors looking for a quick gain, and those looking to invest for the long term. My personal suggestion is to split your trade into two and separate the exit timing for both of them. The first portion is for quick gains, just like there were money to be made in the big swings in stocks like Ideonomics. You can see that there have been swings in its historic price action patterns. The second one is to invest in the long term with the company. Because the company does seem to have like real technology, it has strong relationships with key governmental departments to secure long-term contracts, and its small cap means that it still has a lot of room to keep growing in future. Now, keep in mind that there are a significant amount of risks involved if you want to buy Rcat Holdings for long-term holding, because of all the volatility that is currently surrounding the company. And this is why I would recommend you to treat the portion, like that specific portion of the trade, carefully. Because the stock has already surged, but not at a such degree it reaches the full potentials, I would recommend to buy a small position now, just to keep your FOMO at bay, and to buy some more shares later on when it corrects. Based on the risk profile and the level of speculation currently going with Rcat Holdings, I would recommend to keep the position below 0.5% of your portfolio, if possible. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.